trading show where I share my real P&L on 3 accounts and share my proprietary safe wheel options trade for free. I want to make sure you guys can hear me okay on the live stream. So type in the chat that you can hear me okay. Um, Also, while I'm waiting for any response here, post any questions you might have. Do them earlier rather than later so I can get to them before the end of the broadcast. Sometimes those questions, they just come in at the last second and, I'm already right at the end. Some guy says you hear me fine. All right, thank you. Appreciate that. And So Sweet Bear says that, and James. All right. Let's get into the earnings edge. I think you guys can see my screen there. You can see here what I traded last time this was Apple, and we actually took another loss here in Apple, so 247. This trade has now had 3 losses in a row, which is pretty rare because I typically win about half the trades. So if you win 50% of the trades, getting 3 losses in a row doesn't happen too often. Here's the spreadsheet. Well, you can see the P&L here in the account, 7834. And you can see that since my latest update, 16 wins, 19 losses, 7 break evens, average win 867, average loss 491. And you can see, let me put in the thing, 7834, 7834. So you can see how the earnings edge did in 2022, 63%, then 2023, 17%. Now it's down 18, and you can see how it compares to the S&P 500 since inception. Let's see what SPY is trading. SPY 488.13, and you can see that the S&P since 2022 is up 2.77%. So it finally recovered. It took 2 years to recover. But overall, this system's up 56 versus 2.7 on the S&P. There's way more volatility with the earnings edge compared to the S&P. Okay, so that is the earnings edge. Let's take a look at the Premier Level 5. Notice how I share my account net liquidation value. You don't see that too often. Okay, so here we're at 34,760. Let me put that in the spreadsheet there. Something else, I was talking to another guy about sharing his P&L, and it looks like he made money and he's a day trader, but then I asked him to share me the account statement, right? And then the profit and losses so you could see what's actually being traded in the accounts to make sure that it is actually day trading that's occurring. You can see that I trade options on the ES and also bonds in this account. This is everything in this account that I trade. So if the account's up or down, it's because of what was traded in the account there, and you can see what it was. Let's see, 34,760. 34,760. Okay. So I started this on April 8th, 2022. You can see I outperformed here, the S&P in 2022. 2023 underperformed. The risk is about 1/3. The drawdowns are about 1/3. So it's about risk-adjusted returns are 1/3 the risk, basically. And this year to date, you can see the S&P is up 2.7, down 1. And overall up 15.8 versus 19.49. So the S&P since April 8th of 2022 is actually up 20%. So it's just that there was a large gap there, it looks like, from January through April in 2022 where the market was down pretty good. Or I should say, yeah, so it was down pretty good, and then it kind of, if you bought it then, you're much better off. But here you can see, well, yeah, is the S&P outperforming? Yeah, but remember, my risk is only 1/3. So it's not, on a risk-adjusted basis, it's not even close. The PL5 is outperforming. All right. Let's see. We've got 23 wins, 8 losses, 10 break-evens, and 4 open trades right now. And that's the PL5. All right. So you can see everything you need to see with the PL5 there. I just closed the cart on the PL5 also. I had an open enrollment just for about a week there. So I'm not sure when the next open enrollment is going to be. It could be 3 months from now. I don't even know yet. I haven't decided. Because all the people that came into the Premier Level 5 now, I've got to take the time and make sure they learn everything about it. So I'm going to be focusing on that. All right. Let's get into the safe wheel. And this account here, you can see I'm trading DKNG. I'm not trading anything else in this account. And it's at 45.38. Let's put that in there. I'm at 65. Sorry, 69.08. 69.08 is the net lick. How's the safe wheel doing? You can see it vastly outperformed in 2022. 2023 underperformed. And so far this year, outperforming. And the drawdowns are about half the drawdown. So on a risk-adjusted basis, much better. And yeah, outperforming quite well. 38% versus 2 overall. So safe wheel. And this is the one I give away for free. Let's take a look at where my positions are. What do we have? I've got a put hedge here. I've got a long call to protect my put hedge. I put that on those on Fridays. There's a 43.5 call. And I'm long 100 shares. Now, last week I sold a covered call. And what it looks like happened is I did not get assigned. So the stock was down. And then it must have shot up because it's up pretty good. Let's take a look at the chart real quick. Yeah, well, it did shoot up earlier today, but now it's back down. Okay. So what am I going to do here? Well, I want to sell a covered call, but let me check my put hedge to make sure that it's in line. I want to make sure it's not under 100 days and that it's within 70%. This strike, 31, is within 70% of 39. So I'm just going to pick up my calculator here. And let's see. So 39 times 70% is 27. So I want my put to be at least 20, the strike to be at least 27 or higher. And it's at 31, so it's fine. Don't need to do anything with that. This call, I've already purchased this call. I paid $6 for it. That happens every Friday. Now, let's run the traditional wheel. We've got the 100 shares that I have, and I want to sell. My cost basis for those are $37.50. So my basis here is $37.50. So I want to get sell a call at least at $37.50. Well, we're trading around 39, so I should be fine. So let's see what we can do here. I want to go into the nearest expiration cycle. I'm going to look at the calls, and I want to get at least around 40 cents. So I wouldn't trade the 40.50 because I can't get enough premium, but the $40 call I could sell and get over 40 cents, and it's out of the money. So I'm going to sell this one. I'm going to do one. As far as sizing, I'm going to do one because my account's between $5,000 and $10,000. So everything's all sized out with this with the system. Everything's sized out. So if you ever learn the system or want to get the fast track to the system, everything is sized. You don't see that a lot with other trading systems. They don't really size things for you. You just kind of guess, and you just kind of pick a stock and you trade it and you hope you make money, and you don't know how much to buy. So I see that all the time. Okay. So I sold this covered call. I've got a covered call in at the $40 strike. So if I get a sign, that's okay because I paid $37.50. I was assigned at 37.50. So if I get called away at 40, that's a nice profit. If I don't, I collect around 50 bucks and I just keep the money. Okay, so that's the safe wheel. Now, one thing, this thing's getting almost to $40. Once it gets over $40, um, what'll happen is I'll continue to sell covered calls until I get called away. Once I get called away and I'm in a situation where I only have the put hedge and this is over $40, then I'll move to a different underlying. I'll move to a different stock. But right now, I'm not going to move to a different stock. I own 100 shares. Even if it was over $40, I own 100 shares I would hold until I got out of the wheel, the traditional wheel portion of the trade. Okay, so let's get into any questions. Let's see, Will, the $5 call last week more than paid a year and a half's worth of calls for me. In case anyone was wondering about the $5 call, Pop pays off for himself. Yeah, so last week, not this week, but last week, I sold my long call. I bought it for $5, maybe $6, maybe $4. I don't remember, $5 probably, and sold it for $137. So that'll cover, however many weeks that is. I don't know, 137 divided by 5. That'll give you the week, how many weeks. I'm not sure how much Will sold his for. Mine was like 137 bucks. And that covered, any losses that I had on the put hedge. Because that's what the reason is for that long call. Okay, less is more. When those bonds expired, how long does it take to get your interest funds? Next day or much longer? And do you immediately roll into another bond or wait? Okay, so you're talking about the PO5 system because I'm profit stacking. Typically, when you buy them, the 3-month treasuries, you buy them when you initially buy them, you buy them for less. Let's say they're worth, at the end, they're worth $1,000. You buy them for $950, for example. So when you purchase, you go in at $950. When they expire, they give you $1,000. Basically, is how that works. And do I immediately roll to another bond? Yes, I try to do that right away. I want to always be holding bonds for a couple of reasons. One, obviously, I want to be making interest on my money. But two, I like to have my money tied up in bonds rather than tied up in cash, because in that rare, probably never going to happen circumstance if the broker has an issue with liquidity, they're going to come to their client's cash account and take it. Like they have kind of the right to do that, to provide liquidity for themselves. So if you're in cash, they can do that, but if you're in bonds, they cannot. So that's another reason why I get into bonds and try to stay in bonds all the time with my excess cash. It'll probably never happen, but you just never know. Less is more. Will, those $5 calls seem to pay out once or twice a year, which equals anywhere from 50 to 200% return over the long term. Yeah, I'm sure I've won a year without then paying off at all. Maybe, I don't know. Typically when they pay off, it's like 20 bucks, 40 bucks. So yeah, I would say they probably break even if I had to guess. I don't know. I'd have to run the numbers, but yeah, it's nice to have, because DKNG got some type of takeover bid and went from $38 to $100. You're really going to be happy about holding those long calls. It's just like the ultimate protection. I just like to think of every scenario that can come in and protect myself. Bill, how do you exit the put hedge when the stock goes above 40? Looks like the put hedge would be in the red. Yes, so I would take a loss on the put hedge if that were the case. It's time to take the put hedge off, and How's this one doing? This one's down $46 right now. So yeah, you would take a small loss on that, but your stock getting called away, I would make way more than the loss on the put hedge. Carl, when in the options chain and toss, the test of the prices on the options are red, green, white. What do these colors mean? And is there a color that has an edge when buying or selling? So in the options chain and toss, let's see here. Oh, okay. I think these are just colored based on what their last time they went up. So this one, the last tick was an uptick for this, so it's green, and the last tick for this was a down tick, so it's red. So I don't think there's nothing really to find or significance about that. The white part about it, that's just, volume and delta. White means it probably just hasn't even traded all day today. Maybe that's what that means. But you can see it just has to do with, what happened in the last tick. That's what I see going on here. See this 54? It'll probably turn green if, there it is, see? And when it ticked up, so it turned green, then it went down when it went red when it ticked down. James says, why 3 puts? Because the system's set up for the safe wheel to only go long 200 shares maximum. And so therefore, if those 200 shares, let's say you're in the scenario where you're long 200 shares and the price drops significantly, I want to be short 300 shares, right? When I want my hedge to outweigh my shares eventually, right? It's once you get past the strike price of the put hedge, that put hedge is going to make more money than your short. You're going to be long 200 shares, and the price goes down. You're going to be making money with the put, so it's got to be long or short 300 shares. That's why it's 3-to-1 ratio. If I'm trading with $6,000 to $10,000, if I was trading from 10,000 to 15, I would double everything. So I'd have 6 put hedges, and I would trade 2 options, 2 contracts on the traditional wheel. So it just continues to rise with the amount of capital. So it's sized properly like that. Will, really great tip on keeping the money from the broker and the bonds. Your channel is increasingly valuable. Oh, thanks, Will. Appreciate that. Yeah, I've just been around for a while, and I always try to think of every possible scenario. And yeah, I don't want to keep my stuff in cash. I do have an account with a little bit of cash in it right now, but I need to keep it liquid, so I guess I'm risking that a little bit. I wondered if the color let us know if the market thought the particular option was undervalued or overvalued. Yeah, I don't think it has anything to do with that. Just like what's happening lately is what I see, the color. Thank you. You're welcome. You're welcome, Will. I appreciate you coming on here. And you probably know as much about the safe wheel as I do. All right, let's do some more. DKNG earnings coming in a couple weeks. Hopefully we're still in and make some juicy premium. Yeah, it's always nice. I'm not afraid of earnings at all, especially when you have that put hedge there to protect you. If I was in the traditional wheel, I would be a little scared or leery of being in during earnings because the stock could go down 10% and you had nothing to protect you with that traditional wheel, and you're going to go down 10% with it and maybe not recover for a year or 2 years, or maybe even never recover. I've seen that happen with the wheel, where the stock actually went so low that they no longer traded options on it. So you want to be, I like being more safe than that. Ilanio says, just join. Can you repeat why 3 puts? Yeah, because you want to have at least 300 shares short compared to the possibility of being 200 shares long. So you want to be But your hedge, you want it to outweigh your possible long position. And so it would be a 3-to-2 ratio, right? Three is more than two. 300 shares short will protect 200 shares long, because it's maximum 200 shares long with the safe wheel. Okay, I don't see any more questions. And one thing I always like to say, I'm going to be imparting. If the P&L is not real, what else are they trying to conceal? I'll be back next week. We'll see you then.